Hello everyone, welcome to today's session. So today we are going to cover SA 402 that was left a bit in last session, and then we will start with the chapter 3. Also we will take some questions on SA 402, okay, so that you can have a good understanding of the topic. So just a quick recap I will give before we proceed to the further discussion on SA 402. Just a quick recap of what we discussed in the last session on this particular topic, and then we will take it ahead. So we started with SA 402 like when it is required, when the auditor is going to rely upon the controls, systems and processes that are there in the service organization that will give me a comfort on the processes or the activities that are being performed in the service organization. Then those activities and processes are impacting the user entity's financial statement. Means at the end, here in our example, remember ABC Private Limited and ABC Limited and XYZ Private Limited. So ABC was a user entity, XYZ was the service organization or the third party or to whom we outsourced. Now if any of the activity of XYZ is impacting the financial statement of ABC Limited, in that case, yes, as an auditor of ABC Limited, I have to take comfort on the processes, systems, controls that are being performed in the XYZ Private Limited to the extent they are relevant and they are impacting my ABC Limited's books of accounts. Okay, so that is where we need to understand when SA 402 will be applicable. Once we decide yes, SA 402 will be applicable, then in order to obtain the understanding as per SA 315, we were supposed to do some procedures, and we will also learn those procedures what we are required to do. If we are getting sufficient and appropriate information, plus we are able to understand the internal controls, perfectly fine. If we are not able to understand, then only we will go and we will see that okay, what are the systems and processes which are there in the service organization. And for that we had multiple options available with us. Option number 1 was to obtain a type 1, type 2 report. Option number 2, to either contact the service organization and obtain information directly from them for the testing purpose. Option number 3, visit service organization, perform procedures, get comfort and then proceed ahead. Option number 4 was appoint someone else as an auditor expert who will visit service organization on your behalf and will perform the procedures. Okay, if we are not able to perform any of the procedures because of XYZ reasons, we may choose to rely upon type 1, type 2 report as our requirement is. Okay, or as we require, we may obtain a type 1 or type 2 report. Now we discussed that okay, there are certain factors that we need to ensure when we are using a type 1, type 2 report. Number 1 was the professional competency of the service auditor, except when he is the member of institute. Number 2, whether he is independent or not, again except when he was the member of institute. The adequacy of the standard that is being used in the issuance of that report. Remember, if the report is issued outside India, which standard they have followed, whether it is giving that much kind of assurance to me that I require. So that standard. Then we discuss about the period, which period of report, like what period is covered under the report, the discretion, systems and the controls which are there under the report are relevant to my audit or not. Let's say for example they gave something else, like instead of the payroll functions they only commented on the tax functions of the third party or the service organization. Not relevant for me. So accordingly, once I will identify whether this is relevant or not, I need to then consider the report for my assessment. And then I will do okay, now I have got the information. Now whether I can perform the risk assessment, yes, I will perform the risk assessment. If no, then I may choose to perform some other procedures to get more information. Okay, till here we discussed, and one important point we discussed was the user entities complementary control. So complementary user entity controls are such controls which are there in the user entity, which are complementing the process that is happening in the service organization. Remember, we discussed one example of the trend analysis in the case of payroll, that a trend analysis is done when a payroll calculation comes to the ABC Limited, and before processing they do a kind of trend analysis just to check whether the amount is within the given range or not that they are processing for the salaries. Clear? Any doubt till now, till here? Any doubt? No? Clear till now? Okay, good. Now, as I told you, I just need to discuss one more important point with respect to the type 1, type 2 report. Remember, we discussed about the type 1 and type 2 reports category. Like, okay, type 1 report was at point, type 1 report is specified date, and type 2 report is for the period. Now, when we are doing SA 315 or when we are complying with the SA 315, that is, we are understanding the business, type 1 report also can provide us the comfort. Perfectly fine, because it provides the description of the system. It provides the information about the system processes or controls that are there in their objectives. Perfectly fine that they can help, a type 1 report helps us. Now you will ask the question, if type 1 report is sufficient, then why we have a type 2 report? If type 2 report is there, then why we have a type 1 report? Why 2 reports are required? Why only directly we can go for a type 2 report? See, both the reports has different purposes. Type 1 report is something which provides you information which is helpful in your planning, understanding the entity, its environment as per SA 315. Now let's say, for example, I did the understanding. Now I want beyond understanding, that I want to draft procedures, I want to perform the procedures, I want to test the controls. Can I test the controls which are there in the service organization? Earlier I took the type 1 report to understand the service organization. Now I am going to the next stage of the testing of audit, testing procedures. Can I do testing? Earlier I got the type 1 report, but on the basis of type 1 report I cannot perform testing of those controls, because those controls are there in your service organization. For that we need type 2 report. Type 2 report basically provides information or a comfort or serves as an addition equivalent to the testing that is performed on those controls. That's why type 2 report has the description of the service auditor's test. This part can be used as per SA 330. That is, when I will decide the response to the assessed risk, I may use this particular testing performed by the service auditor. Okay, performed by the service auditor, that okay, whether do I need to whether I have the sufficient and appropriate audit evidence or not, or I'm perfectly fine, service auditor has performed sufficient test, service auditor has done appropriate testing, I'm conformed with the conclusions, I'm okay with the conclusion, I can proceed ahead. So this will give you comfort on the part of the testing. So whenever user auditor is required to test or is required to verify whether the controls at the service organizations are operating effectively, at that point in time I can use type 2 report also. So that is the another use of type 2 report. Apart from obtaining the understanding, we can use the type 2 report for test of controls also. Clear? Any doubt? And again that thing comes into the picture that okay, if we are using a type 2 report For the test of controls, then we need to ensure certain things. Okay, so let's understand that part. Using type 2 report as audit evidence that controls at the service organizations are operating effectively. Okay, till now we use the type 1 type 2 report to obtain the understanding of ABC Limited's business and process and controls, and the controls which are there at the service organization level, means SA 315. Now we are talking about subsequent step, which is SA 330, creating a response to the assessed risk and then gathering the audit evidence as per SA 500. Okay, now when we are using a type 2 report, that okay, now we will use a type 2 report as an audit evidence for my testing purpose. What things do you feel that I am required to check? Okay, today I am saying okay, before using type 2 report, what are the matters that you are required to check whether I can use the type 2 report or not, that may affect the usage? Anyone? What things you are required to check before using type 2 report as an audit evidence? What you will check? Yeah.
Before using that report directly, I will first assess what is the kind of relationship between the entity and that service organization, which kind of services they are taking, and the extent of their usage of that services by the entity, nature, their alliance, their internal relationship, etc.
Yes, very good. Somewhere I feel that is we already cover when we do the analysis at the time of understanding the user entity and the controls which are there in the service organization, means at the time of understanding the business, SA 315. Now let's talk about, once you understand, okay, I understood these are the risks. Now to test the control, I want to use type 2 report. What are the things I will look that okay, these things should be there, then only I can use type 2 report as an audit evidence, apart from the understanding part? Understanding one is correct, absolutely correct. Anyone? No? Okay, I'll tell you. See, when you are using type 2 report as an audit evidence, basic thing that I will check is that whether the type 2 report provides me sufficient and appropriate audit evidence. For example, I needed the type 2 report, okay, to ensure that okay, whatever controls are there have been tested and they are working effectively. Now to get that kind of evidence, let's say I highlighted some of the controls as the high risk controls. Now if I highlighted some controls as the high risk controls, I may be required to test more samples on those controls. Okay, so let's say there is a control, payroll control in the service entity or service organization. After reading the whole process description and everything which was given in the type 1 report or in type 2 report, which is similar to the type 1 part, I understood okay, this payroll control is very critical, significant control, key control, and if this fails, then there is a higher risk of material misstatement. So I will first of all assess the risk of material misstatement as a high, and then I will mark this control as a key control. Now to get a comfort whether this control is operating effectively or not, I need to test more samples. One, because it's a key control. Second, there is a higher risk of material misstatement. Now, when I will get the type 2 report, what if the service organization auditor has not assessed that control on the higher side, rather he has treated that control as a non-key control, or the risk under which that control is mapped has treated that particular control as a, that risk is low, or he might have skipped testing that control, saying that okay, there are other mitigating controls. In all those cases, I may not be able to use the type 2 report as an evidence. So first and foremost thing that I need to understand that whether the type 2 report is providing sufficient and appropriate audit evidence. Whether the type 2 report provides sufficient and appropriate audit evidence. What if in type 2 report you see that okay, the control has failed at the service organization? In that case, I don't have the sufficient and appropriate audit evidence to say that there is no risk of material misstatement. Rather, I have a reverse scenario that I have a failed control. I need to perform some other procedures to get more comfort now. So, I first need to understand whether that service auditor's audit report provides me sufficient and appropriate audit evidence about the effectiveness of the control. And that I can do by understanding again, all that factors that I just now discussed. For example, what was the design of the control? What was the risk assessment? What was the, you can say, testing performed, including the number of samples? What was the outcome of the testing? Period of the testing? Okay, all those things I need to understand, and then only I can comment okay whether I can use type 2 report as a audit evidence or not. Clear? Any doubt? Okay, now if no doubts, I have one important question that I want to ask you guys. You already understand there is SA 240 under which there is a responsibility of the auditor, okay, with respect to the fraud in an audit of a financial statement. With respect to that, are we required to obtain any representation from the service organization regarding frauds, or are we required to conduct interviews with respect to the fraud at the service organization? What is the requirement of the auditor when it comes to the service organization? Can anyone tell me? Like, you can guess also. Perfectly fine if you don't know the answer.
User auditor shall have inquiry with management of the user entity whether they have identified any fraud or non-compliance at the service organization. But instead of actually obtaining such management representation from the service organization itself, we can have inquiry with the management of the user entity.
Yes, absolutely correct. So, the user auditor, like auditor of the ABC Limited, is required to inquire with the management of ABC Limited that okay, whether service organization has informed you about any of the fraud, because if there is a fraud in the service organization, that will impact their controls and indirectly it will impact my financial statements over here. So whether any fraud has been reported by the service organization, if yes, then what is the fraud, details of that, okay, and if any such matter has been reported, then you need to evaluate the impact of that matter on the overall testing. Okay, so to summarize, service user entity auditor is required to inquire about fraud at service organization. Now that we cannot do directly, reason because we were not able to test the controls, we were not able to obtain the understanding. That's why we are using type 1, type 2 report. So in this case also, there will be some kind of restrictions or some kind of issues. For that only, the user auditor is required to inquire with the management of the user entity. So inquire with the management of user entity about the fraud or non-compliance. Any doubt till now? Yes, Hemant, I will be taking your doubt in a minute. Don't worry on that. But apart from that, any doubt? Okay. Now, there is one doubt, that is how to identify key controls at the service organization. See, we will also understand when we will discuss SA 315, but I'll just give you some glimpse on that. How to identify key controls? Basically, how I identify a key control. Let's say, forget about the service organization as of now. Just focus on the identification of the key control. What I do is, when I do a risk identification, that okay, which are the risk of material misstatement, or basically what could go wrong in a particular process, I tag each of the risk high, medium, low. Okay, this is a high risk, this is a medium risk, this is a low risk. Let's say, for example, hypothetical example, okay, the risk is that you end up paying wrong amount of salary, or an excess salary, less salary, or whatever, wrong amount of salary. Now that is the risk, that you pay a wrong amount of salary. Now what are the controls in front of that? The control is that someone will prepare the payroll calculation and someone will approve it. That is a major control which will cater to my that risk. So for the point of view of that particular risk, this is a control which covers the risk at a major level. Okay, again I am required to go at the assertion levels, but for the simplification purpose I am telling you that okay, this control, that someone will prepare the payroll calculation and someone will review, caters the risk at a majority level, that it mitigates the risk at the majority level, and hence this control is my key control. Let's say you have another control which compares month on month payment that you make for the salary. Let's say, for example, last month you paid 1 lakh rupees, now you are paying 1.2, then in the subsequent month you may be paying 1.1. So you are comparing the trend analysis, but trend analysis will not give you completeness on the accuracy or the completeness assertions. That's why I may not choose to target or identify that control as a key control, rather the control which caters to all the assertions or the risk at the major level, that will be my key control. Now again, the same thing applies to the service organization. Risk at the service organization, the controls which are catering majorly are the key controls. I hope that is clear to you. Any doubt?
Sir,
Yes.
if management of user entity also have no knowledge about the fraud or any non-compliance at service organization, what we have to do in that case as auditor?
See, in that case, as an auditor, I'm not required to inquire further, in much more detail, because if I say that type 2 report is sufficient for me after performing the procedures, I may rely upon the type 2 report, because over there also auditor is there who is issuing the report, and while issuing the report, if he's following our Indian standard, okay, remember that we discussed in the last session, in that case it will be sufficient for me, because one of the requirement of that standard is to look for the fraud.
So means it's the responsibility of the auditor of that service organization itself.
Yes.
Okay, sir, clear.
Whether the type 2 report be a detailed one, yes, type 2 reports are detailed one, because they provide you information on the control system processes which are there and how effectively they are operating. Any further doubts? Okay, so one last question that I have, let's say for example, there is one, let's say, control that you want to rely upon, but that control is at the service organization, and the service organization auditors has has qualified his report. He's saying that control is not performing effectively. Now you want to qualify your report also. Will you refer that service organization's report in your audit report? You want to qualify your audit report basis the qualification which is there in the service organization's audit report, qualification in his audit report.
Sir, if modification to my report is of such significance that for understanding that qualification, user of my audit report, if it is necessary to have that knowledge about the auditor's report, then only I am under requisition to give reference to that audit report. Or if it is required by law, in that case also I can have reference to that audit report.
Okay, great, good. Anyone else with
Otherwise, sorry.
Yeah,
Otherwise, also, we when the service organization auditor has qualified the report, we should at least go through what exactly the why is qualifying the report. Some detail we should go into detail and at least reconfirm that there is some fraud and actually reason that some disqualification. I mean, the good reason for disqualification. Then we can disqualify. Just we can't take base of his qualifying report just because he's a professor.
And also, sir, giving reference in our audit report does not mean that our responsibility has in any way diminished. It's our own responsibility for the opinion we are giving in our own report.
Yes, absolutely. Correct. So, absolutely. So, what happens is, see, when we are issuing our audit report, let's say after performing the procedures, after getting the service auditor's report, if there are qualifications in that also, on the basis of that, let's say at the end we conclude, okay, no, we are not able to get sufficient and appropriate audit evidence. Everything is done, but we don't have the evidence. We don't have the required evidence for this particular purpose. In that case, we have to modify our report. That is perfectly fine. Now the question comes is, can I refer service auditor's report in my audit report? Usually I should not be referring, but there are two scenarios where I should refer. Number one, when it is required by law. In certain cases, very limited cases, it is required by law. But again, I need to specify that this does not reduce my responsibility as a user entity's auditor. Second scenario is when it is necessary for the understanding of the readers that, okay, there was a qualification in an audit report. I tried to perform each and every procedure that I could, but still I don't have any comfort on the the controls which are there at the service organization, or the data that is being used by the user entity which is prepared by the service organization, and I am also not able to get the comfort. In that case, it is necessary, and in that case I may refer the report, but again I need to specify that, okay, this does not reduce my responsibility to obtain the audit evidence, to perform the testing and to conclude. As correctly pointed out, that I should not only be modifying the report just because the service auditor's report is modified. I am required to perform additional testing. I am required to take the comfort. If I am not able to do that, if I am not able to obtain sufficient and appropriate audit evidence after doing all the requisite procedures, then only I have to modify. Clear? So if it is a qualified report of service organization, shall we not go ahead with other options? Yes, basically if there is a qualified report as a service organizations or service auditors, I have to perform other procedures, which may include that I may request them, okay, allow me to come at your place and to perform the testing. Or I may choose to perform some more substantive testing of the data that is being received by user entity from the service organization. Or there are different ways that you can testing can be performed in those scenarios. But when after testing, if you are not able to get comfort, if you are not able to get sufficient and appropriate audit evidence, then only the modification is required. Any doubt? Any question on this one? No? Okay, if no questions, then shall we quickly look into the module, that how the chapter is there, so that you can get a good understanding of that. Okay. So the chapter starts from last time we saw, that is page number 2.40, that is SA 402 over here. Then you have a descriptions of what is a service organization, what is a service auditor. We have very important table that how the processes of the service organization, when they are impacting the user entities record, we conclude that okay, they are impacting the financial statement. Very important point. Again, the objectives, type 1 information about the type 1 report we already discussed, type 2 report again we discussed. Then remember, when we are doing the planning, either we may perform some procedures or we may rely upon the service organization's report, a type 1, type 2 report. So that is the points, all the points over here, like either obtain type 1 report, contact service organization, you may visit over there, you may send another auditor to perform the procedures, like that way. Then using the type 1, type 2 report, the things that you are required to look into, for example, description, appropriateness, complementary user entity controls, plus service auditor's competency, independence, and the adequacy of the standard under which the report has been issued. Then you have a, when we are looking for testing of controls, test of controls under SA 330, again, whether we have sufficient and appropriate audit evidence by using that report. Okay, then if not, then we need to perform the procedures. Okay, so we may obtain type 1 report, we may perform some other procedures if we are not able to get sufficient and appropriate audit evidence, we may perform some other procedures at our end, okay, or at the end of service organization. Or we may use another auditor, okay, please go on our behalf and test, because we are not able to get information from the report or we don't have a report. So these options are available. And once you decide to rely upon the type 2 report, okay, you need to check the description, design, complementary user entity control that we already discussed, the time period covered, the testing of the control that is performed, whether that test is sufficient, the assertions which are used, or whether the control has been classified as a key control based on the assertions, risk of material misstatement, all that stuff. Then the fraud part, that okay, user auditor is required to inquire with management of the user entity regarding the fraud at the service organization. then the reporting part, reporting by the user auditor, and these are the scenarios that where you can refer to SO's Service Organization Auditor's report. Okay, this one. This is the law. This is when understanding is required. Otherwise, you should not refer to. Usually, you should not refer to the work of service auditor as a general thing, but in these two scenarios, which are the exception, you may choose to refer. So that is there SA 402 in the module, study material. Any doubt? Okay. If no further doubts, what I propose here is, let's start with the chapter number 3 first, and then after the break we will come back and before the end of the session we will come back and carry on the questions for the SA 402. Okay, so let's start with the chapter number 3. Now when it comes to chapter number 3, now what that chapter is about, and I'll provide an understanding of that chapter first, and then we will go into the much more detail. And this particular chapter is bit, you can say, more into the you can say that understanding of the audit planning. So your chapter number 3 is about audit planning, strategy and execution. Here I will be less talking about the standard, but I will be talking more on the planning, how to do the planning, how to do the strategy making, how to execute the audit from start to end. Okay, and we will discuss more on these topics. Before I proceed on the audit planning part, strategy part, okay, can anyone tell me what is the first stage of the audit? What do you do in the first stage of the audit?
Start with the engagement letter, appointment
Okay.
letter, engagement letter. After that, we prepare a plan. We obtain understanding of the nature of the reporting we are required. After that, we discuss about the scope, strategy, the way, which kind of procedures we will perform. On the basis of our risk assessment, we will decide to what extent and which kind of audit procedures we should perform. And during the whole performance of this audit, if I am under any responsibility to inform management or those charged with governance of any non-compliance or any material misstatement or any kind of thing in internal control also, in that case I will communicate with them. And after that, if I am with sufficient audit evidence obtained, in that case I'll issue my audit report finally.
Very good. Yes, absolutely correct. So when I talk about my engagement terms, assignment of auditor, CNA procedures, that is the first step of my audit, and that first step is audit planning. Okay, that is kind of commencing about the audit. I will commence the audit by doing all these things. Okay, I will assign the auditor, like if it is a firm, then they will decide who is the partner on the audit, who will be the audit team. They will agree the terms, they will perform the client acceptance and continuance assessment, okay, including the engagement acceptance and continuance, and then we will say, okay, this is the audit planning and the commencement of the audit. That is the first step of the audit basically. And if I talk about the first step, it is not something we just need to perform and that is done. No, on the basis of this step, our risk assessment, our audit strategy, everything starts preparing up. Because once you perform a CNA process, client acceptance and continuance, you get some data about the client, you get some information about the client, and then the outcome of the CNA becomes the base, and you carry forward that for the understanding of the user entity or the understanding of the client, company, organization, or I will go based on the CNS data that I have taken, I will understand the entity. And because of these particular things, because I do a appropriate planning, because I can, I am thinking ahead by doing the planning, there are lot many benefits of it. First of all, you are able to provide sufficient attention to the areas that is there in the audit. You are able to resolve the issues on timely manner. You are appropriately able to manage the audit, okay, selection of the team, and then supervision, and till end you get a benefit. If planning is done appropriately, 50% of the audit is done, kind of, you can say. Okay. Now the next stage comes is, once I do the planning, once I do the commencement of the audit, okay, which is a part of my audit planning, there are other things I need to perform. Can someone tell me what is the difference between my overall audit strategy and audit plan? What do you think is the difference between overall audit strategy or audit plan?
Strategy is, getting an idea of the what we are going to do, the checking of the particular organization, our client. And in case of audit plan, it will be a detail. Then detailed description and step-by-step presentation, procedure for our overall strategy, how to achieve our overall strategy.
Okay, good. Yes.
In nutshell, we can say that a strategy is what to do, and planning is how to do and when to do. That execution part related is with planning.
Very good. Okay, great. Strategy is broader, audit plan is narrow. Yes. Strategy precedes planning. Yes. Absolutely correct. Now, if I have to summarize, okay, what is overall audit strategy and what is a detailed audit plan? See, when I talk about overall audit strategy, at that point in time, I'm talking about, you can say, a scenario that, okay, which type of audit it is. Let's say bank audit, insurance company audit, NBFC audit. What are my reporting objectives? Apart from following SA 260, is there anything else that I need to report? Let's say if it is an NBFC audit, there might be some additional reporting objectives. Okay, what is the team or resource I might be having? Because team, let's say for example, understand practically that you cannot have a, the team size. Let's say today audit is there. I may choose to have a team size of 10. Can I have a team size of 100, 200 when the client is having limited set of operations, not higher set of operations? It is not a multinational company. It's not a 1,000 crore entity. It's a small 50, 60 or 100 crore entity. At that point in time, I need to check my resources. Okay, I need to check, okay, how much resources I do available, I do have for this particular audit, seeing all the restrictions and inherent limitations, and on the basis of that, I need to plan for the audit. Okay, so team and resource, time, continuance and acceptance, results, independence requirement, ethical requirement, all those things when I prepare on an overall level, that is an audit overall strategy, overall audit strategy. That gives me understanding about the audit. That gives me a direction, okay, that gives me how and when, what you are going to plan in your audit. That is my overall audit strategy. But when I go ahead, when I prepare a detailed plan, area by area, risk by risk, or testing by testing, number of locations, understanding the entity, who is a part of management, who is the CFO, manager, procurement head, which areas I need to test, whether what is materiality, all that stuff. That is my detailed audit plan. So strategy is a broader document, kind of you can say, whereas the audit plan is a detailed document. Okay. Now, what we will do is we will cover this particular chapter from the module because it is very beautifully explained over there. Plus, we will be taking some notes for the quick revision before the day of our exam that will really help us with the topic. Okay. So, chapter number 3, audit planning, strategy and execution. Now, as I discussed in start, that when I talk about commencing the audit, which is a part of my audit planning, okay, when I talk about commencing the audit, what I do is I agree on the terms, audit date, I agree what is, audit team, auditor's assignment in detail, what is the audit request about, CNA and all that stuff, and on the basis of that, I decide whether to take the audit or not. Because these are the activities which are done before signing the engagement letter. Okay, so commencing the audit, the first things are this. Then we go on the agenda sheet, preparations, requirement, which is the later part, which is based on the audit plan development. Once you develop the audit plan, then these steps come into the picture. And then you have a audit execution and the follow-up that we will see in some time. Okay. Now, when I talk about planning, as I have iterated multiple times, planning is not a one-time activity. No, it is a continuous process. It is a process that from day one of the audit I start until the time of signing of report, it continues. Now someone tell me, sir, how will you continue planning when you are signing the audit report till last day? When we will see subsequent events essay, we will understand that even after completion till the date of the audit report, we see the events occurring after the balance sheet date. We see their impact. Even on the date of signing of audit report, if some event comes up, I need to assess the impact of that event on the opinion that I have issued. I may require to amend my planning. I may require to perform some additional procedures, and then I need to sign the audit report. So till the time I don't sign the report, I have to consider I cannot close the planning part. That is for sure. Okay, I may have some definitive outcome from the planning that I have performed till now, but that doesn't mean I will not look into the planning again. Never. It's not the case. I may look into again based on the events or facts that may come up to me even before a minute of signing the audit report, and that happens. Okay. And that's why we say that planning is a continuous process. Now, when I say planning is a continuous process, there are multiple things involved in the planning that we will see throughout the session. We will understand throughout the session. And one such thing is to prepare the audit strategy document and to prepare the audit plan. Okay. If you prepare the audit strategy, that helps you to prepare the audit plan. Now, when we do the audit strategy, as I told you, one of such particular part of audit strategy is acceptance and continuance of client relationship. Can anyone tell me what is that? We have discussed multiple times. Just a quick recap, if anyone can tell me, what is acceptance and continuance of client relationship? And what we should do with that? Yeah.
Before accepting any engagement, we should have clear understanding of that relationship with we have that client. It may be our previous client.
Yes. But what do we check in that?
We can check integrity of the management of the entity with which we are going to take this engagement. If it is having any complexity with our integrity and independence related which we have discussed already in SA 220 and SQC1. We have to check that things before accepting that. And also at that time also we can check whether we have sufficient time and resources available to undergo that engagement. We also have to check that thing also.
Yes, very good. Absolutely correct. We have already discussed client acceptance and continuance when we were discussing SQC1 and SA220. It was just a quick recap of that. That okay, when we are doing the client acceptance and continuance as a part of my audit overall strategy, okay, I understand that whether I can continue the engagement and the client because of whether I have any doubt on the integrity of the owners, whether is there any threat to the compliance to the fundamental principles, whether my team will be able to comply with the ethical requirements while discharging their functions when they are performing the audit, or is there any matter which have arisen in the previous audit which is now creating or which is pointing towards something which because of which I might not take the audit or I might not accept the audit. Okay, if such scenarios are there, those are required to be considered under the CNA. And once I do a CNA, if everything is fine, then on the basis of that, I may proceed to the prepare audit plan. Okay, audit plan, as I told you, then contains the important details for the your overall audit performance. It not only contains the what I say understanding of the business process, but it contains a lot of things beyond that. It contains how I will be developing the risk assessment, how I will be doing the testing, how I will be doing analysis, who will be doing, a lot of things will be there. And I'll give you one example. I'll show you there is an audit program something that we prepare. Now I'll show you what is audit program, how do we determine the audit plan. I'll just show you one example so that practically also you understand, what is plan, what we do in the audit planning. Okay. And for that, I will give you a live template for the audit planning. Just let me bring it on the screen. So by use of this template, we will understand, okay, this is how the planning is done. This is how the risk assessment is done. And this is how, the detailed understanding or you can say path we prepare for the audit. I think there is some technical issue. I'll show you here how it is prepared. So when I prepare the template, there are few things that I prepare the template from start to end, which covers all the details. For example, first thing it is their name of resource. Now this name of resource, let's say for example, Mr. A, okay, he is the audit executive or manager or whatsoever. In front of that, what I will do is I will plot the process / sub process that he will be performing or testing or looking. For example, purchasing / invoicing or whatever process I want to allocate to this particular person. Now the next steps comes is the risk assessment. Okay. Risk assessment means I first of all identify the risk. What are the risks in this? Maybe let's say unauthorized invoices are processed. This is a particular risk. Okay. Now, in front of that risk, there may be a control. Now that control I will identify over here. For example, approvals before processing of invoice, Okay. And then I may decide to perform some substantive testing. Let's say, for example, invoice testing. And when I prepare this particular table, this is the audit program. So basically what I do here is I start to end from my resources to the testing, I map everything. For each and every process, I map. For example, purchasing, I may allocate, okay, I think no, purchasing is a higher risk area based on my risk assessment. Let's do one thing. Mr. B will also be there along with Mr. A. So this is how I prepare the audit plan, okay, audit program. This audit program later on helps me to prepare a detailed risk assessment sheet. Now, this is not the only thing I prepare. There is a risk assessment template that we call it the RCM, risk control matrix. We prepare a risk control matrix where the risk assessment, control, testing are mapped in front of each with the processes. So that is the separate thing that we do apart from preparing audit program, and that is more detailed and more provide at the control level, assertion level in detail, what you say, based on this audit program. And this is done in reality in audits. These documents are prepared. It is not something I'm just telling you, okay, but these documents are prepared in actual. And on the basis of that only, I do my whole audit. And this not only covers this particular part, this also covers the weeks or the time that will be taken to complete the whole process. Let's say, for example, 3 to 4 weeks. Apart from the audit program, I do have, as I said, RCM is a risk control matrix, plus I have a scheduler. Usually in audit, we prepare a scheduler. For example, based on the weeks, 3 to 4 weeks. So I know Mr. B and Mr. A are going to be busy for 3 to 4 weeks. So I plot 3 to 4 weeks of Mr. A and B. Now I'll see how many resources I do have available, and I will do plotting for them. And by this way, I prepare my whole audit program, audit plan, RCM, everything, and then I carry on the audit. And as and when changes comes up, I update all these documents. I update all these plans, programs, and schedulers. Clear? I hope some clarity. You might have received some clarity on this. Yes, no?
Yes, sir.
Yeah. So based on then this, as I said, I prepare the risk assessment and all this stuff. I do the detailed planning for that. Now, what I do once all these things are ready, okay, all the documents are ready, I start my audit. And accordingly I proceed with the audit. I perform the audit. Now, what we need to learn over here is what are the benefits of the overall audit strategy? Yes, Jenny.
Sir, can you please explain again the concept of RCM and scheduler that you have written over here?
Yeah. Basically, when I talk about RCM, okay, what is RCM? RCM is a risk control matrix. It is a document which maps end to end the risk and the controls which are there. So it maps that, okay, this is a risk, you have risk assessment, okay, based on the risk assessment done, and on the basis of that you map, okay, what are the controls in front of that risk, and then what testing you will be performing. So that is an RCM. And scheduler, when I talk about, it's a scheduler based on the audit program that I plot that, okay, if let's say Mr. A and B are going to be busy for 3 weeks, so which 3 weeks, which 4 weeks?
Okay, sir.
4 weeks of July, 4 weeks of August, if I'm going to complete the audit within 3 months, then 4 weeks of which month? So I have to plot everything in the scheduler based on the program and the plan.
Okay, thank you, sir.
Any further doubts? Any doubts? No? Okay. If no doubts, let's proceed further and understand now the benefits of your audit overall, creating an overall audit strategy and the plan. Okay. Basically, when I create this kind of plan, overall audit strategy and the overall plan, what happens? First of all, I get a clarity that how many resources I have and where my resources are going to be. What will be the allocation of resources? Okay, Mr. A and B here, Mr. C here on this area, Mr. D here. Okay. Allocation of the quantity and resources becomes easy for me. Time and deployment. Okay, 3. I total have 10 weeks for Mr. A. Mr. A, I can only have 10 weeks in the audit. So if I give 3 weeks to the invoicing and purchasing of Mr. A, let's say he's the manager and critical resource for me. Then rest of the weeks out of 10 weeks, let's say if 3 weeks given here, then rest of the 7 weeks where. So accordingly, it gives me clarity on the time deployment of the resources and the management of the resources. These are the benefits of having the overall audit strategy. So there is one doubt. Any standard HW package for the scheduler? Can you, Hemant, explain that query again? Software package. As such, there is no software package for the scheduler. There are multiple on the market. That is not the scenario. But basically, it can be done in the Excel also. So you may not require a specific package. It can be done through Excel also. But if you have a package, then it's not bad to have. So that depends upon the tools that you will be using in that case. So as such, there are no specific packages. Any further doubt? Okay. If no doubt, then let me show you one template that I have for the risk assessment, or you can say for the RCM. Just for your information purpose, this template is there, and you can add more details to the templates. There is no standard format as such. This template is just for the purpose of your understanding. You can add more details. See, this is how we prepare the whole template, whole mapping. We have a process. Okay, we do have a sub process. For example, I may have an invoice processing, let's say, or you can say purchasing. You have a sub process of, let's say, invoice processing. You may have a division, procurement division, process invoice division, purchasing division, whatever division in the company is there. Who is the process owner? Like from the company side, who is managing the process? Let's say Mr. X from company, he is the process owner. So he looks after the invoice processing. Now system involved, which ERP, which systems are there? Let's say for example, SAP system is there, or Oracle is there, or XYZ. Then I do write the description of the process. I do write, okay, what is the description of the process? Okay, for example, a draft, like when I will perform the walkthrough of that particular process, I will understand what are the things and how do they perform that particular process. Okay, that is the process description. Then I may have attachments to that. For example, if I have taken some screenshots, if I have taken some documents, I will attach that. Then I will identify the risk in that particular process, and those risks are one by one I identify at the assertion level: completeness, accuracy, cutoff, existence and occurrence, presentation disclosure, valuations. Remember we discussed assertions in past. On the basis of that, I do that assessment of the risk, and then I decide the risk assessment: high, medium, low. Whether this is a high risk, this is a medium risk, this is a low risk, and then I map the controls in front of that. What is a control ID, control name, control description. Not only that, sometimes we go beyond this. What we do is we map the control at the assertion level. Okay, we map the control at the assertion level. For example, my risk is there. Sorry. So my risk is there, let's say at the completeness, accuracy, or let's say at valuation part. These are the three parts, three assertions where my risk is there. There is a control, let's say. Now that control is only catering to completeness, not the accuracy. But there is another control. Let's say I'll give you one full example, then only we will be able to understand in detail. Okay, I'll write the whole description of the invoice processing so that you can understand. Okay, just a minute, let me copy paste the description, and on the basis of we will do that. Just a minute, some issue is there, sorry. I think I'm not able to copy the process, but okay, I'll tell you. Let's say risk, unauthorized invoice processing. Now, if an unauthorized invoice is processed, then I have an issue at the, let's say, completeness only. Okay, unauthorized processing of the invoice, that is a risk. There is second risk which I may have: incorrect invoice processing. Okay, now by having an incorrect invoice processing, can someone tell me as an example, okay, which assertions might get impacted because of this risk? If I have a risk of incorrect invoice processing, which assertions might get impacted?
Creditors data.
Okay, when I say assertions, these are the assertions. Let's say I'm saying the risk is incorrect invoice processing. Then at the assertion level, which assertions will be impacted?
Accuracy.
Transaction.
Very good. Accuracy, because I am processing incorrect invoices. Anyone else?
It can also be cut off, means if it is not dated properly.
Yes, very good. So cutoff will be there.
On valuation also, because it can impact inventory valuation.
Very good. Yes. So by this way, what I do is I highlight or I assign the risk at the assertion level. Now let's say I have a control. Okay. Now control is invoices are processed after getting approved. This is a particular control, number one. Invoices are processed after getting approved. Okay. Now tell me, if I am processing the invoices after getting approval, which assertion it will satisfy, or to which assertion I will get a comfort on?
Completeness.
Okay, completeness.
So this EO or PD, can you tell me the long form of that?
EO is kind of existence and occurrence, and PD is a presentation disclosure. See, if invoices are, yeah.
It can create a problem related to existence and occurrence also.
See, so if I'm checking the invoices are being processed and then those invoices are being approved, it usually goes to the EO, existence and occurrence. That okay, after getting approved, the invoices are correct and they are not unauthorized invoices. Okay. Now, if I talk about this particular control, if I have this particular control in front of these two risks, then what will happen is this control is only satisfying one assertion, but I have risk on many assertions. So I need some more controls which might be there in the organization to satisfy these assertions also, or I may perform some substantive testing to satisfy the risk on these assertions. Based on that, I do a risk assessment. Let's say this is only impacting two assertions. I may categorize this as a medium risk. But if this is impacting three assertions, I may classify this as a high risk. Again, there are other things, past issue identified, my experience with the business understanding, all those stuffs are there. Okay, what is the inherent limitation on that particular part? What is the control risk? So this is only the control risk I'm talking about, or the risk generally. So based on that, what is the inherent risk, control risk? Remember, there is a formula of the audit risk. On the basis of that, I need to actually derive what is the audit risk, whether the high risk, low risk, or what is the risk of material misstatement in that particular area. And accordingly, I need to decide whether, for this particular part, I need to check, okay, this is a control only catering to E&O. I might not, identify this as a key control. I might say, oh, this is a non-key control. But there is another control, which is invoices are reviewed for details and information before processing. Okay, so someone reviews the invoices before they are processed in the system with respect to the details like invoice amount, everything. Okay, in that case, this particular control is satisfying all these requirements, all these assertions. Okay, so he is satisfying risk on all these assertions. In that case, I may tag this as a key control. So remember, in some time before I was talking about key, non-key. So this is how I do a key and non-key, and this is whole particular document is known as a risk control matrix, because I identify the risk, I identify the control, and everything is in front of one process. So process by process, I prepared this document in detail. Clear? Any doubt? I hope this example is clear to you guys. This is just an example that we prepare in our audit as a part of understanding. Okay. So let's come back to the module and understand. So we discussed the benefit of overall audit strategy. What are the benefits? We may have a qualitative resources in advance because of that. Allocation of quantity and resource. Now in the previous document, if we add the resource also, time also, it becomes a detailed plan on itself. Like plan, then you have a risk assessment and continuance, and then you have other details also. Even you can have a time development monitoring from that, as I discussed, management of the resources becomes very easy. So these are the benefits of your overall audit strategy, like having the overall audit strategy and the plan. Now, there are certain things that we need to consider when we are preparing the overall audit strategy. Some areas, some elements which are there. Okay. So number one is the characteristics of the engagement. When we are preparing the overall audit strategy, we, as I discussed, that we need to highlight in our overall audit strategy that what kind of engagement it is. For example, whether it's an NBFC engagement, whether it's an insurance one, okay, what kind of engagement it is. Basically, the financial reporting framework will also depend upon that. Industry specific requirement, again, insurance, bank, whatever it is, private limited company, listed entity, according to that. Expected audit coverage, number of locations which are there, even the components which are there in the particular entity, even the divisions. Sometimes you have multiple divisions in one company, so the number of divisions also. The relationship between parent and component. If you are also a group auditor, or if you are, for example, auditor of the consolidated financial statement, you are going to audit the consolidated financial statement. In that case, you need to also consider how many components are there, where are the components located. All that stuff you need to document in your overall audit strategy. Okay. Again, components audited by other auditors. We will see when we will do the, using the work of other auditors, another auditor. At that time also we will discuss this particular topic in detail. Okay. But as of now, in overall audit strategy, we document that who are the auditors which are involved for the component. Again, service organization, we just now saw SA 402. Consideration of the service organization, again that becomes part of your overall audit strategy. Understanding of the previous audits that you already have done with the entity. Okay. Information technology aspects, for example, which systems are being used overall, how the entity is advanced with respect to the information technology. I'll give you a simple example. Let's say if you are auditing a payment gateway, okay, a payment gateway company, or if you are auditing a manufacturing company, the level of the technology both are using will be different, and that you can easily point out from the start of the audit itself. And that we need to document, okay, this is a company which is more tech savvy, more into the technology, more into the IT, everything is online, like a payment gateway, they are operating totally online. Their product is an online product. As a result, my audit procedures, my audit plan program will be more focused on this particular part, online part, technology part, IT system part, rather than the on-ground testing and physical verifications. So let's say if there is a payment gateway company, I'm damn sure there will be no inventory or hardly any inventory. Fixed assets will be more of intangible assets, softwares, patents, trademarks, something like that. Fixed assets might be there, but they will be some kind of hardware systems that they are using. So in that case, I know for sure that physical verification will be less, but I may require an expert in the IT field to verify these things. Okay. And the client's data for CNA, availability of the client data. Then the second part you document in your overall audit strategy is the reporting objectives. For example, what is your timetable for reporting? Let's say I need to close my audit by 31st July. Today I am standing on 1st of April. So I have 2 months, 3 months, whatever time phase is there. I need to complete my audit within 3 months. Okay, or 4 months. Then who is the particularly meeting with the management? Who is doing the meeting with the management? For example, there are multiple parts when it comes to the management. For example, you have an audit committee, you have board of directors, you have a CFO, you have managing directors, CFOs, CEOs. So when you are doing the meetings with the management, you need to understand with whom you are required to meet, when you are required to meet, what are the point of discussions, what you will discuss about the audit work, all that stuff on a basic level you need to document in the overall audit strategy. Okay. The discussions and the with the management that you will be having about the report that you will issue and the timing of the report, including the communication. So I will be informing the management, okay, that what is my responsibility, what is the responsibility with respect to my communications, my reporting, when I will be doing the reporting, how frequently I will be doing reporting, all that stuff will be there. Then communication with the components. So when I will be doing a consolidated audit of a consolidated financial statement, at that point in time I will be required to communicate to components the materiality, the procedures or the areas that they are required to look into. So all these things will be there. Yes, Pooja.
Sir, there is a point that speaks about discussion about status of audit work. What does it mean exactly, status?
Communication on the status of audit. So I will be, what is the point here is that I will be discussing with the management, okay, management, how I will be doing the communication on the status of audit work, how frequently I will be providing you the status update about the audit, how much audit is done, when the audit will be, like say for example at the 10% of this completion stage, at 20%, at 30%, how frequently I will be communicating to you. Communication on the status of audit.
Okay, sir.
Then you have a communication with the engagement teams also that you need to document, okay, in my planning, that how frequently I will communicate within the team, because it is necessary that you have a communication within the team. Let's say for example I am doing fixed asset, I identify something which is relevant for the let's say bank or the treasury part. Okay, so when I'm doing the fixed asset testing, I identified, okay, there are some payments which I think are made duplicate payments are done to fixed asset vendors, because I have one bill, but when I'm seeing the ledger there is more capitalization done. In that case I may inform the treasury guy, are you seeing something similar when you are doing the bank reconciliations, or something which is you may identify as a duplicate payment, something like that. So communication within the team is necessary, and how frequently we will be doing that, that is you are required to document in overall audit strategy. And any communication with the third party, if you are appointing auditors expert, for example in IT case, then communication with those third parties, or if you have some communication requirement with outside stakeholders or regulatory persons, then that particular part. Next thing you are required to document in your overall audit strategy, okay, with respect to some important factors, significant factors, that is your materiality, okay, identifications of preliminary identifications of higher risk of material misstatement areas. Again I'm saying preliminary identification, not the detailed risk assessment, that is a separate procedure, just preliminary identification. Impact on the financial statement level, overall risk of material misstatements impact on the financial statement level, overall level, and how it will impact my direction and supervision of the audit. For example, last year there was a big fraud in the company that was in the news, it was reported everywhere. Okay, now this time I am doing the audit of that company because of the they changed the auditor. Let's say for example, hypothetical example, last year there was a big fraud, it was in the news everywhere, it is very big issue now, regulators are looking into the company with respect to the fraud, and that company has changed the auditors. Now I am doing the audit for the first time. So there is a preliminary identification that there is a fraud in this particular area, because that is already in the news, everywhere confirmed, regulators are looking into that. So there is higher risk areas already identified. Now the impact of that higher risk areas on my audit is I need to perform procedures on those areas and the areas connected to that fraud in much more detail. I need to obtain more audit evidence. Okay, because here the integrity of the management is already on question. Here there are factors which are pointing out there might be other frauds. Here there are scenarios which might be pointing out that okay, there could be higher misstatements in the financial statement. As a result, the impact I need to document, preliminary impact I need to document in my overall audit strategy. Okay. Then about the professional skepticism, how the team needs to exercise, results of previous audits or identified deficiency. Just now I gave an example of a fraud previously identified. And then discussions of matter that may affect the audit. Okay. Or any matters, maybe ethical requirements, maybe conflict of interest, maybe related to independence, any matter that is affecting the audit. Okay. Evidence of management commitment with respect to the maintenance of design, implementation and sound internal controls. Again, best example, fraud. So we know there was a last year a fraud and there is very less chance that management is managing or keeping good controls in the organization. Volume of the transactions. Now that is very important to estimate well in advance. Simple, if there is a manufacturing entity, they may have limited number of transactions or some transactions with respect to purchase and sale. If it is a payment gateway, numerous transactions, for example UPI company or company which is providing UPI services, even 50 rupee transaction, 100 rupee transaction, commissions on that, numerous. Telecom company, numerous transactions. If it is a real estate company selling flats, plots or something like that, they may have a high turnover but they may have a limited number of transactions, very restricted. Captive company, for example providing only services to its parent, hardly any transaction except for one transaction or two transaction or transaction with the parent company. So accordingly I need to assess what kind of company it is, what kind of business into is and the volume of the transaction. And that will directly lead to the internal control. That if there are voluminous transactions which I cannot verify, for example, let's take an example of the biggest telecom company in the India. If I'm auditing that particular company, okay, think of the transactions, number of subscribers that telecom company has, recharges that are being done on a daily basis, okay, the calls that are happening, the balance that is being deducted from start to end. Just estimate the number of transactions that there might be during the year. For an auditor, at that particular point in time when there are so much of transactions, internal controls becomes very, very crucial. Reliance on the internal control, IT systems is very important. I cannot say that in that particular audit, when I'm doing an audit of a telecom company, that I do not rely on the IT systems. When everything is being there, from start of the call, recharges, person's mobile balance, subscribers, everyone is connected to the IT. And if I say, okay, even when you call and do an international call, the amount that is being charged on the basis of minutes is automatically. In case of a postpaid, amounts that are charged for a call, it's automatic based on the number of minutes you speak, or the plan it is there, it is automatically calculated. There is no person at the back end who is preparing bills for all the postpaid users. No, system is preparing for you. In that case, it becomes very imperative for me and necessary for me to understand the IT environment, to rely on the IT environment and the controls. Then significant business developments. If there is any development like merger, acquisitions, or some kind of you may say transactions, deals that the company is entering into. Otherwise, frauds, investigations, positive, negative, both, significant business developments, industry specific developments, any new technology. For example, I'll give you one simple example. Rollout of 5G. Okay, was a significant development in the industry. For example, SEBI regulations for registered investment advisors. So if there is any amendment to SEBI regulations for registered investment advisors, yes, there is a development with respect to the industry. If some new law is coming, industry specific development. Simple example, let's say taxation on virtual digital assets. That has a huge implication. Or even when I talk about taxation, including TDS on VDA transactions. So there was a huge development in the industry which were dealing into the virtual digital assets. Financial reporting framework, if there is any change in the financial reporting framework and other significant changes that are required to be documented into your overall audit strategy. Then comes the last part of the strategy is the nature, timing, extent of resource. What engagement team you have and the budget you have, engagement budgeting, all those things you need to document. So this is how I need to prepare the overall audit strategy. Any doubt with respect to this? Any doubt? No? Okay. If no further doubts, what I propose here is let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. Thank you. Continue the session. So we were discussing about the overall audit strategy. Now we need to discuss about the audit plan. Okay, so there is one query. Do you have a real life document of overall audit strategy? Yes, I do have, Eamon. But the problem is, because of the client confidentiality, I will not be able to share that. Okay, so let's continue and discuss about the audit plan. Now we are done with the strategy. We discussed the strategy. Now let's discuss about the plan. Now, what is overall audit? What is audit plan? Based on the overall audit strategy, we prepare a plan. Plan basically provides you a detailed summary of whatever we have done in strategy. Based on that, you prepare a detailed plan. Okay, kind of, it is continuation of the strategy, but in more detail than the plan, overall audit strategy. And there is point number 2.5, which talks about the relationship between the strategy and the plan. As I said, plan is more detailed and the continuation of the strategy. Once you prepare the strategy, based on the points you have listed down the strategy, you provide the detailed things of those points into the plan. Okay, so that's why plan is more detailed than the overall audit strategy. They both are related because one is prepared first and then second is a continuation of that in more detailed version. Okay, so audit strategy is prepared before the plan, but they both are interrelated. And audit plan basically covers each and everything in detail. For example, which area to test, what to test, how to test, the risk assessment, the assessments at risk assessment at the assertion level, everything in much more detailed way. If I talk about in one term, like if you add up program that we saw, RCM, scheduler, everything into one document, that becomes your plan. Clear? Now the next document then comes is the audit program. Once you prepare the plan, on the basis of that you prepare an audit program. What is audit program basically? Audit program contains the detailed area wise that we saw in example. Okay, the way we saw here, this is the audit program. It contains the detailed area wise. After the plan, you prepare this program where you enumerate each and everything, and even more than that. Sometimes we also enumerate nature of the business which is there, overall plan, systems or internal controls which are there in much more detail. I've just shown you some columns, but audit program, if you combine the risk control matrix, substantive testing with the process level detail, that becomes your overall audit program. So for example, let me show you. This is my template, risk assessment template that I was talking about. Okay, RCM. Now, if I modify this template to include more details, it will become my program. For example, over here, if I include auditor, time in weeks for auditor, audit reviewer, okay, and even say closing date, yeah, sign off date. These 4 columns are for the auditors. Basically, they provide the details to the auditor. For example, okay, Mr. A is going to be auditor for that. He will require 3 weeks. And the reviewer will be Mr. B, who is the manager. The sign off date is expected, or to complete this setting or this particular whole area, is by 30th July 2024. Hypothetical example. If you include these details over here, then it becomes your kind of a audit program also, because here I am including all the details with my auditor, with my what process is there, who is the process owner, system involved, process description, risk assessment, and much more things that I can add on. There is no limit to this. I can add on more things over here. Okay, so this becomes my audit program, because this contains what is the nature of the process. I may have some more details over here. For example, I may have entities, business nature as an overall thing to document over here. I may have entity name to document over here. I may have multiple things to document. I can do multiple things documentation over here. Systems, size of the organization, its management, organizational structure, everything can be documented in this. Accounting policies. For example, I can have one more column over here with respect to accounting policy for process. So which accounting policy is being followed for this particular process? Let's say it's a purchasing. Sometimes let's say it's a fixed asset. So do we have a fixed asset accounting policy? There's a specific fixed asset accounting policy. Depreciation. So whether it is being covered by separate policy or the policy on the fixed asset is already covering that. So all those details are over there. Sometimes we include more details with respect to the accounting policy. For example, last review date. Okay, accounting policy last review date. And sometimes we also mention whether group accounting policy. So sometimes accounting policies are decided at the group level for a group of entities. So in that case we write whether this is a group accounting policy, yes or no. So you include accounting policy details also in one single document, and you can add multiple things process wise. That becomes your audit program. It is not only risk assessment now, this is an audit program altogether. Clear? Any doubt? Any doubt? Okay. Now, if I just compare, here by filling up the details, okay, I do some testing, I do some information gathering, based on that I fill up the details over here. Apart from that, what do you think is relevant for me when I'm filling up the details? Let's say for example, whatever information I have obtained during the year from the client is relevant for me, because when I'll do the risk assessment, I will understand the entity under SA 315. I'll use that particular information. I'll use the information with respect to the system of internal controls which is there, evaluation of the control made in the current year. Do you think anything apart from the current year's detail, maybe related to the last year, is relevant over here? Anything from the last year's thing is relevant over here? Yes, no? Very good, Hemant. Absolutely correct.
Changes in accounting policies, if there has been made during the current year apart from the previous year policies and procedures.
Yes, absolutely correct. Very good. Sometimes we also consider last year's risk assessment. Last year, which was the system involved. How much time it was taken to audit last year? So So all those things are also sometimes considered before I fill it up. So for example, last year it took 3 weeks, no, it took 5 weeks, and we identified, and still we had to over and invest one more week. Last year there were 3 people involved, Mr. A, Mr. B and Mr. C. Last year there was a group accounting policy, but that policy has changed in the current year. Last year the sign off date was kept this, but this is what delayed or something like that. So experience gained from the previous year audit are used over here to determine the things. So I can when I will be using my previous year experience, I need to adjust these things accordingly.
Even any changes in structure of business model or management structure can also be there.
Yes, absolutely correct. So even in a lot of cases, not in a lot of, in almost every case, we prepare a organizational chart, or sometimes management already has with them. But if, let's say for example, management doesn't have, we prepare by obtaining the information from them, the organizational chart, that CFO, board of directors, who reports to whom.
AAA&PE levels, no?
Yes, and based on that we understand, is there any change compared to the last year. So this everything becomes part of your audit program. Clear? Any doubt? Nope. Okay, let's go back to the study material. So we were discussing about the audit program. We will also see from the study material the things that we saw one with a format. That to begin with, when you come with an audit program, okay, you need to draw a broad outline, process by process. Then after that, what accounting procedures has been reviewed, document deficiencies in the system of internal control. We place the controls, we do the process description, attachments, what risks are there, okay. And then again, a lot of things are documented in that based on our understanding. We also document based on our experience gained during the previous audit. Just now we discussed that. Important changes that have taken place in the business, and the evaluation of the internal controls made in the current year. Risk assessment and the control assessment. Remember the next part of the control which is there. So these 3 things are documented in your audit program. And there are certain things again, which may impact your audit program, that are entity to entity or industry specific things that you need to consider while documenting your audit program. As I said, technological based, IT based industry, manufacturing, something like that. Clear? Okay. If no further doubts, okay, yes, Pooja.
Sir, if earlier materiality level which we have said while programming the strategy, plan and program, and after that in case I have revised that materiality level, so in that case I have to revise my whole strategy, plan and program also. So who is the person who is going to update this? Is it only the engagement partner or the team leader, or even member can update that changes also?
No, basically I'll tell you, this document is kind of, I would say it's a, guiding part for the whole team. So usually changes in this documents are not allowed to be done by everyone, but there are specific people in the team who are assigned responsibility to make changes in this document. Tomorrow, let's say someone does, incorrect changes in this document, the whole audit will go for a toss. And whatever changes are done in this are reviewed by the engagement partner. It's not something that, someone makes the changes and it's done. No, all the changes in these documents are reviewed by the engagement partner, and specific persons are assigned the responsibility. If there is, let's say for example, I feel there is required, this particular document requires a change, I will go to that particular person. I will provide the information on the basis that I am requesting a change. The person will make the change and also will inform the engagement partner this change is there. Engagement partner will review, and then on the basis of that, the final document will again be circulated with the team so that they can aware there is a change in the risk assessment, there's a change in the materiality, there's a change in the testing procedures and all that stuff. I hope I have answered.
Yes, sir.
Okay. Now let us see one question on this and then we will proceed forward. So let's go for test your understanding number 2. Take a time, take 2 minutes, read and think of your answer. What do you think with respect to this? I'll give you 2 minutes to read the question and think. So, you tell me, is the approach proper in this scenario? Do you think the approach is proper? Test your understanding number 2. What do you think? Is the approach proper? Yes or no? Okay. So I'll tell you the answer. Yes.
While planning, he also has to decide the nature, timing, extent of audit procedure at the planning itself. It cannot be decided at the exact time when he is actually performing it. So this approach is not correct.
Okay. Good. Anyone else? Anyone? No? Okay. So, if you see the question that CA Pradyuman is a planning for audit of a listed entity which has a headquarters in Noida. While doing this exercise, he made a list of various procedures intended to be performed by him during the course of audit. Okay. So, he made a list of various procedures that he is required to perform during the course of audit. Fine. He has further made up his mind to decide about the sample size at the time of performing various planned procedures. Is the above approach proper? I would say no. Reason because two things. I am not only required to make a list of procedures performed. No, I am required to prepare a whole detailed overall audit strategy, plan and program, which includes not only the procedures, understanding of the processes, process description, the details that we discussed in that particular format. All these things are required to be documented at the time of planning. Till the time I don't understand what is the risk involved in a particular process, how can I decide what procedures I need to perform? Whether it's a high risk, low risk, there are these three risks. How can I decide in that case the procedures which are required to be performed? That is incorrect. Number 2, sample size. As I told you, based on the document itself, the format that I showed you, I decide how much I need to praise reliance when it comes to the controls. And then I decide the substantive procedure. and that becomes the whole audit program, including the risk control matrix and everything, that gives me the comfort and the direction how I am required to approach for an audit when it comes to the execution. That's why this approach is not proper. Absolutely correct, Hemant. Clear? Any doubt to this? Okay. If no further doubts, let's proceed to the next steps of the audit. We are done with the planning. We are done with the understanding of the planning of the audit. Now the next step is audit execution. Okay. Now audit execution is when I execute the planning whatever I have done. Execution of risk control assessment we will see in chapter number 4. Execution of testing and then the reporting part. Reporting again SA 700 series we will see in chapter number 7, okay, in detail. Testing we will see something here, we will see something later on in chapter number 5, audit evidence also. So by this way we will be seeing the execution part, plus more important area that we will be covering in this particular chapter is SA 600 series, when I have to rely upon the work of another auditor, internal auditor, auditor's expert. Okay, plus I will be looking into some more standards when it comes to the testing part. For example, SA 540, okay, which is related to the my sorry apologies sorry. Okay, so I was talking about, I will also be looking into more areas in this particular chapter, that is SA 540, which is about auditing accounting estimates. Okay, then I will be looking onto detailed part of that SA 540. We will understand about the accounting estimates and their disclosures and how to audit that. We will also see analytical procedures as per SA 520. Okay, and a few more things we will go into a deep dive of this particular chapter. So now that is the execution part that we will understand over here. So let's start with first understanding that when it comes to the execution, we all know that when I talk about execution, it's testing. We do the substantive, we do the test of control, substantive testing, we gather the audit evidence, evaluation of the audit evidence. But it's not only the we are testing. It's not only the team that is testing. Sometimes we have to rely upon the work that is performed by someone else. Okay, now in that case, first part is that when I rely upon the work which is performed by the another auditor, that is SA 600. So we'll start with SA 600 now. Using the work performed by another auditor. Now, when we talk about this particular essay, can someone tell me in which scenario this essay is applicable? When I talk about this essay, in which scenario this particular essay is applicable using the work of another auditor?
Sir, in the case of branch auditing, we can use this essay.
Okay. Anyone else?
Joint audit.
Okay. Anything else you think, okay, this essay can be used in that area also, or in that scenario?
So it can be the using of the work of tax auditor.
Okay. tax auditor. Anyone else?
Auditor of subsidiary company.
Auditor of subsidiary. Yes, very good. So yes, correctly said. In case of use of work performed by another auditor, it's not only we are required to use this particular standard in case of only component and subsidiary, but whenever the auditor delegates the work, okay, which is performed by other auditors, we can use this particular standard. Okay, we can use this particular standard. Now in that case, however, there are certain things that we need to understand. Number one, this standard does not deal where two or more auditors are appointed as a joint auditor. So in case of joint audit, this is not applicable. This is only applicable when a work is delegated to another auditor by first auditor. We sometimes call that first auditor is a principal auditor. When the principal auditor uses the work of another auditor. For example, branch is good example. For example, you said that holding subsidiary is a good one. Yes, in those scenarios, this particular standard can be used. Now, to use this or to understand this standard, we need to use certain terminologies first. First one is principal auditor. My mistake. Okay, principal auditor. Now, who is the principal auditor? Basically, principal auditor is the one who decides that okay, what information he will be requiring from the component auditor or the other auditors. So he is the one who is using the information or the work of another auditor. The auditor who is using the work of another auditor is the principal auditor, kind of. In case of a holding subsidiary scenario, you can say auditor of the holding company. Okay, then comes the second part, is your other auditor. When I talk about other auditor, it is auditor other than the principal auditor. Auditor other than principal auditor. Is other auditor who will be I will be using this particular term throughout the session. Okay. Now when I talk about other auditor, the term other auditor, okay, he can be the auditor of the subsidiary, which is from where I get the detail as a principal auditor, okay, or auditor of the component. So the third term I use here is the component. Now component can be a division, a branch, a subsidiary, joint venture, or associate enterprise, or whosoever's financial information is included or used by the principal auditor. Sorry. Okay, so whosoever's financial information is included in the financial information which is audited by the principal auditor, that particular becomes the component. Clear? Any doubt with these terms? Principal auditor, other auditor, and the component. Okay. Now the question comes is, let's say there is a scenario, I will explain that. Mr. A, okay, is the auditor of ABC Limited. Now ABC Limited has a subsidiary, okay, that is DEF Private Limited, and the auditor of DEF Private Limited is Mr. B, auditor of subsidiary. Okay, Mr. B is the auditor of subsidiary. Simple example. I will not bring the complications into this. Now, first of all, tell me who is the principal auditor in this scenario?
Mr. A is the
Mr. A.
principal auditor.
Correct? Mr. A is the principal auditor. Anyone else with different answer? Anyone with a different answer?
Sir, for subsidiary, Mr. B also is a principal auditor.
Okay. For subsidiary, Mr. B is also principal auditor. Yes. Okay. Now I will present some facts of the cases. Some more facts. ABC Limited, total revenue rupees 10 crores. DEF Private Limited, total revenue for the year, okay, rupees 10,000 crores. And these are the scenarios that happen in the real life, trust me. Now tell me, who is the principal auditor and who is the other auditor?
Sir, my answer will remain the same. Both the auditors are the principal auditor for their respective companies.
Okay.
So Mr. A is the principal auditor in this case, sir. Because ABC Limited is a holding company, and for the financial reporting purposes, the ABC Limited has to prepare the entire financial statement for the whole group. So I think Mr. A should be the principal auditor, sir, I think, sir. For the whole entity, I think.
Okay, Vignesh. Okay. Anyone else with a different answer?
Sir, as the definition says that principal auditor is the auditor who is auditing the entity in whose financial statement the figures are taken or included of this which other entity. So in that logic, ABC is auditor, Mr. A is the principal auditor.
Okay. Okay, tell me one thing. How many of you seen that? How many of you seen annual report and the part of the audit report on the consolidated financial statement? In annual report, how many of you seen the opinion on the consolidated financial statement? No one? Strange. Okay. Okay, you might be knowing whether the opinion on the consolidated financial statement and the standalone financial statement, they both are issued together or different?
Together. In same report but separately.
Sorry?
In same reports but separately. Standalone balance details will be separately and consolidated details will be separately.
So is there in one audit report in both in one audit report in which the both of the financial statement are mentioned?
Excuse me, sir. Hello? Excuse me, sir.
Yes, yes.
Sir, I did the consolidated I weave the consolidated report of the financial statements. In that opinion, the auditor states that how to say, I have audited the we have audited the financial statements of the group and its subsidiaries.
Mm.
And no need to mention name, I think.
Yeah.
So then he shall draw his opinion, sir. I think so. That's all. That's all
Okay.
I remember, sir.
Okay. So I'll tell you, both audit reports are separate when it comes to the audit report on the consolidated financial statement and audit report on the standalone financial statement. And I'll show you, to you with an example. I'll show you an example also for that. Let me open one of the audit reports, okay, which is available in the public domain. I'm not opening anything which is not there. So I'll open for the FY 23-24. Let's open FY 23-24. And this is the very important point that I'm going to discuss. So just don't focus on the company's name. I'm just opening for the reference of the, the audit report. Let's go to the first audit report, which is there over here, given in this scenario. Yeah. This is the first audit report, which is given in this. This is the audit report on the consolidated financial statement. This only speaks about the consolidated financial statement, which refers the company as a holding company. Okay. And this subsidiary as referred as a group together. So this is on the consolidated financial statement. Now here you will not identify a report on the standalone financial statement. There is nowhere will be mentioned standalone financial statement. These are the consolidated financial statements, they are separate report. But if I go below, you have an auditor over here in this, perfectly fine. If I go below, I have another audit report on the standalone financial statement, which is only on the company. And to the fact I know that, both the auditors will be same. To the fact I know both the auditors are same. Then you might have, like, if you are saying, if Mr. A, in our previous example, if Mr. A is by default the principal auditor, then why to issue two different reports? Why can't we merge in one? Why I'm duplicating my work having two different reports? Okay, one is consolidated, one is standalone. Let's merge both of the reports, mention in one report only, assurance on the standalone financial statement and consolidated financial statement.
Reporting area is different.
Reporting?
One is for consolidated, that means a group company, holding plus other subsidiaries, whereas the standalone is specific for one company. So, there may be different presentation for the standalone company and group company, for which consolidated audit report has been given.
Yes,
For
absolutely
decision
correct.
making also standalone is required, and then on report in the true and fair opinion is also required for that also.
Correct. So your point is correct, absolutely correct. But when I'm saying, let's say have a separate financial statement, I'm not asking to merge them. Have separate financial statement. Just combine the opinion in one audit report.
The standalone balance sheet gives picture of ABC only one side, whereas consolidated financial statements provide a image of the group.
Perfectly
The
fine.
financials dictated in standalone can be different or getting affected by these components. That's why I'm giving this opinion on both these things.
Absolutely. So when I talk about principal auditor, okay, it's not by default Mr. A. I want to explain you the point that principal auditor doesn't mean that principal auditor by default will be the Mr. A. Here I gave you an example of subsidiary and joint venture. If I change this example a bit, let's say for example, now instead of subsidiary, okay, and DEF, this one ABC Limited, ABC Limited, I'll change an example and I will prepare like, okay, this everything is for ABC Limited. And ABC Limited has two divisions, division A, division X and division Y. Okay, now I have two divisions in a company. Now you tell me which will be the principal auditor. Company has appointed one auditor for division X, one auditor for division Y. Company has two divisions. Now tell me who will be the principal auditor.
They are joint auditors.
No, I never said this is a joint audit. Joint auditor means they both will sign the financial statement of the company together. I am saying there will be only one auditor that has to appoint it as a principal auditor. Means who will sign the financial statements of the company and he will use the work that is performed by the another division guy, another division auditor. Now, if one has to act as a principal auditor, there are conditions that are required to be checked. It's not like that by default Mr. A will be the principal auditor in all the scenarios. Okay, in case of a holding subsidiary also sometimes, there are examples where Mr. A is not a principal auditor. Because there are factors that are involved and that are required to be assessed, who is auditing what. For example, as I said, 10,000 crores of revenue is being audited by Mr. B and only 10 crores of revenue is audited by Mr. A. Majority of the business is lying in division Y, or you say it's a private limited company, DEF private limited company. The knowledge about the business, risk of material misstatement in the financial statement, performance of the additional procedures. If all of these things are considered, then you may find that majority of the work, majority of the testing, majority of the understanding is required by Mr. B. So when I talk about group materiality or materiality for the whole holding company or consolidated financial statement, materiality is decided based on the total consolidated revenue, out of which majority of the revenue sitting by division Y, or you call it DEF private limited, not in the holding company. So who is auditing more? That's why there is one requirement in the standard that we need to understand is that is the auditor, before accepting himself as a principal auditor, has to consider these information or this particular points, whether his work, whether he can accept as a principal auditor or not. And these are four important aspects that he needs to consider. Number one, the materiality of the portion of financial information which he is auditing. If he is auditing majority of the portion, he can be a principal auditor. his knowledge about the business. If majority of the business is happening in a private limited company where the auditor is different, is it appropriate for him to be a principal auditor? Answer is no. Risk of material misstatement is the financial information of the components audited by other auditor. Whether the the misstatement or the risk of material misstatement majorly sits in the holding company or in the component. And performance of the additional procedures as set out in this standard by the component auditor. If there are additional procedures required which are required to be performed by the component auditor, okay, when he is auditing the component, and those happens because let's say my group materiality is a different level and my component materiality is at different level, or the risk for the group is something different, or the group for the consolidated financial statement is something different than the risk for the standalone financial statement of that component. I'll give you a classic example. So just let me note down the page number. Page number, it is 384. Okay, great. Now I'll go up again on the consolidated financial statement. We will also learn about this particular part when we will see SA 701, just to highlight you as of now. Okay, now we are at the SA 701, like in this particular audit report, which are the key audit matters. If you see in this particular part, they are talking about a risk of impairment. Although the testing was done and no observation was identified, but the risk is different from the group point of view, which may you not identify at the component level or at the standalone level. This is something different, basically risk. Impairment of plant property, okay, then recognition of deferred tax assets and liabilities, okay, then you have again the same way, this will continue, valuation of defined benefit plans and obligations, okay, capitalization of product engineering asset, valuation of defined benefits plans and obligation. Now and if you see impairment of loans to customer, let's go to the individual level and see how many of risk is present. I'll go a bit on top. Yeah, here they are. I have a recognition of deferred tax and I have a valuation of defined benefit obligations. That's it in the key audit matters. See, the key audit matters are also differing from holding point of view, consolidated point of view, and a standalone point of view. That means a thing can be high risk area for a consolidated group compared to a component group. For a component, okay, something different areas were there, can be high risk. That's why what I will do is I will ask a component auditor to do testing more on those areas. For example, impairment, I will ask them, okay, as a group or as a holding company, as a consolidation, I have a more risk on the impairment point of view. Do testing for more testing for the consolidated financial statement if you are not performed. If you think impairment is not an issue, these are the specific procedures that all the component auditors are required to do. I'm just giving an example. So risk may differ at the consolidated level, at the standalone level, at the division level, at the company level, and that's why when an auditor is deciding whether he wants to be, or if he should accept as a principal auditor, he has to look into all these areas. He has to look materiality, knowledge, risk assessment, and the other procedures with respect to the risk assessment that the component auditors are required to perform. If I'm auditing a 10,000 crore company, majority of the risk will sit at my end. Majority of the issues will sit at my end. how can I say that, other auditor will become a principal auditor? Like, he has to consider all these things before if the other auditor can decide whether he's a principal auditor or not. So these things are required to be checked before an auditor should accept the position as a principal auditor. If he says no, I fill up in the categories, tick mark all the categories, fine, I'm taking all the categories, fine, be the principal auditor. But now, if not, then you may need to think who is the principal auditor. Any doubt? So basically what we are trying to understand over here is, it's not that simple that, okay, I'm the principal auditor, I'm the auditor of the holding company, done. I'm doing the, major. So here we need to understand who is doing the majority part, who is covering the more materiality part, risk of material misstatement and all that stuff that we discussed. And then to decide whether I should be principal auditor or not. Once you decide you are a principal auditor, then your responsibility starts as a principal auditor, and then you need to see what things are you required to follow. A lot of things we have discussed, but we will go again and visit in more detail. Okay. Now, let's say for example, now you are a principal auditor. You are referring or you are using the work of another auditor, other auditor. Tell me one thing, what things or what factors you will look into before using the work of another auditor or other auditor. I want to understand the factors that you will look into before you use the work of that auditor.
Is professional competency, whether it is a chartered accountant practice in practice or not.
Okay. Anything else?
I would rather decide it whether he is a professional or not. If he's professional accountant like me, if he's institute's member, then my checking criteria will get down. And if he's not a professional, then I'll have to check in further detail whether he has that area of knowledge, expertise, if he has performed some kind of work for years or so many, so that he can gain that knowledge to perform that service.
Okay.
So I will check that whether the auditor is what kind of audit procedures that auditor has performed.
Okay, good.
The principal auditor can visit the branch or the component or office to the other auditor, and can also see the books of account of the branch.
Okay, good. So basically, when I talk about, yes, someone was saying something.
I would also check the nature, time, and extent of the audit procedures that he has performed.
Yes, absolutely correct. So when I'm using the other auditor's work, okay, as a principal auditor, I am required to perform some procedures. So we will call this particular part as a principal auditor's procedures that the principal auditor is required to perform. Okay, principal auditor's procedure. Now, before I use the work of another auditor, first thing I need to check, okay, whether the other auditor is professionally competent to perform the engagement or to perform the work. So first thing I will check is the professional competency. Like for example, who is he? Whether he is a chartered accountant, whether he is somewhere outside India, whether he's an accountant, he's a certified person, whether he's allowed to perform such kind of engagements, under which standard he's performing the audits, whether any code of ethics is applicable to him, whether he's independent, all that stuff I will check. Okay, whether I can rely upon the work performed by that particular another auditor, because he is sometimes it may happen that they are not related to that particular entity, they are independent, but it's not the reasonable assurance, it's the limited assurance that has been given by that person, or he's kind of just performing an overall review, not the audit. So what kind of work he has performed, along with the professional competency, I will verify that. So if I talk about the work that is performed, usually that is the procedures that person has performed. Procedures performed by other auditor. Okay. And what was the conclusion? So for example, if he has only performed procedures from a point of view, a limited assurance might not be relevant to me, because in that case, it is necessary for me because I'm issuing a reasonable assurance. How can I use the work of limited assurance to issue an opinion on the reasonable assurance? And I will show you one simple example to that. So we will go back to the earlier part where the group is there. Yeah. Over there is a one paragraph. We will also see in SA 720 that particular paragraph, but just to show you now. If you see over here, we did not audit the financial statement information of one joint operations. Okay, whose financial statement reflect total asset this and revenue this, amounting to this. Yes.
So the screen is showing only the PDF of that module, sir. Whatever you are reading, we are not visible.
Okay.
Yes.
Now visible?
Yes, sir, it's visible.
Sorry, it might be some technical glitch. Okay. So this is other matter paragraph. Now this is there in the audit report, which I'm talking about, that how a different kind of assurance can be given on one report, and I am issuing a reasonable assurance. So here if you see, we have not audited this financial statement, this, and we have considered amounting to this for the year ended on this, considered in the consolidated financial statement. These financial statements have been audited by other auditor. Somewhere down below, if I show you over here, in respect of 6 associate, 4 joint ventures whose financial information have not been audited by us, okay, these financial statements have been audited by other auditors whose report has been furnished by the management. Now, if I talk about these joint ventures, 6 associate who has been audited by other auditors, whether they have issued the reasonable assurance report, limited assurance report, sometimes they also mention these are the 2 step subsidiaries located outside India. They might not be prepared as per the general purpose financial statement or financial reporting framework which is there in India. In that case, what kind of standards they have followed to audit it, what kind of assurance they have provided on these reports, whether I can consider directly. Let's say for example, I'm talking about here hypothetical example. Let's say this is limited assurance given. Okay, now in that case I'm talking about 247 crores of net profit. I'm talking about this much crores of, I think this is a total asset number. Yeah, no, this is net cash flow, and this is a total revenue. So let's say this on this much amount, if assurance provided is not a reasonable assurance but a limited assurance, then I may ask that particular auditor, please perform some other procedures, please perform some more procedures. I am not comfortable on this one because I need more assurance, and that's why I need to assess whether the procedures performed by other auditor is sufficient and appropriate for my purpose, and whether that procedures are giving me sufficient and appropriate audit evidence that I need. Clear? Any doubt? Now, if no doubt, there is one exception to this. Now, the exception is that when it comes to the professional competency, okay, when it comes to the professional competency, if he is a member of institute, okay, in that case, I am not required to check whether he is professionally competent or not, because I will assume that he is professionally competent if he is the member of institute. Otherwise, I have to check, I have to perform these procedures to check whether he is professionally competent, he has performed the procedures that are sufficient for me or not. Clear? Any doubt till now?
No.
Okay. So let's say procedures performed provide me sufficient and appropriate audit evidence. Fine, I'm good and I'm happy. Now the question comes is, if they are not sufficient for me, they are not appropriate for me, I need something more. In that case, what you would do? Let's say you are a principal auditor, you have received a report from the component auditor, he has issued limited assurance. It's not sufficient for you. What you will do?
You will go for checking where he has not given the full assurance. Then we need to check those areas.
Okay. Anyone else? What procedures you will perform if you think, okay, the procedure, I'm not getting sufficient and appropriate audit evidence from the work performed by the component auditor or other auditor.
Sir, I would tell him that what areas are significant for my purpose, and for that significant level, which kind of procedure should have been performed by you. And if it is not performed by him, I can suggest him to do some more procedures.
Yes, good.
If the principal auditor did not get the sufficient appropriate audit evidence, then he can qualify his report, and further, if he is unable to get the audit evidence, then he can disclaim all. He can issue a disclaimer of opinion also, and he can also give, if he issue the audit report, he can give reference in the other meta paragraph, the reference of the other auditor's report.
Absolutely correct. Yes, very good.
Sir, first of all, I will perform the substantive audit procedures and find out the materiality level of the entity.
Okay. Okay. And I'll tell you practically how it works. Now these things are well advanced decided. Remember we were talking about overall audit strategy. At that time we discussed that involvement of the component and everything. So in the start itself, I will ask that auditor what kind of assurance you are going to issue. Whether you are going to issue limited assurance or whether you are going to reasonable assurance. And what areas you are going to test. And I'll ask him, okay, share me what are the critical areas you think, it's relevant from your point of view. So I do have a communication with that auditor. I make, as a principal auditor, I am the responsible person to make sufficient arrangement for the coordination effect with them, with the component auditor. In practicality, there is instructions that are issued by the principal auditor to all the other auditors and the component auditors. Okay, instructions usually ask them details plus provide them the details. When I say ask them the details about what kind of assurance, when they are going to issue the report. Let's say, for example, I am going to issue a report on 31st of July, but they are let's say they are outside India and they have to complete audit report by 30th November. Is it relevant for me? So when they are going to issue the report, what kind of assurance they are going to issue, everything I ask them in advance about the engagement. Once I get the detail, I provide them what are the areas critical for me, how your work will be used by me. So I just also write so that you can understand. Asking details and providing details. When work performed by other auditor is not sufficient. Okay, in that case I will either ask the detail and provide the detail. Ask will type of engagement, okay, period they are covering in their report, the date of issuance. Let's say they are covering till 31st March only, but they are going to issue in the month of November, or they have a different financial year in their report. Okay, significant areas, materiality at their level, then type of assurance, standards they are following. We are following standards issued by the institute. If they are not within the India, then what? Which standards are you following? Then, okay, format of reporting, okay, plus sharing of information. Now, what is this sharing of information? This is the practical case I am telling you. One of the component was present in such a country where the auditors were not allowed to share information outside of that country. So component was there, component auditor was there, they were going to audit the company, they were supposed to prepare the financial statement, but they were not allowed to share those details outside the country. Reason because that component was engaged in some of the government contracts, and some government stake was there, it was a complicated case, but they were not allowed to share the information outside the country to anyone else, or they were allowed to share only limited information, not the whole information. So in those type of scenarios, it becomes difficult for you to even have that detail from the component. So all these things we already start at the start of the audit only. When we prepare the strategy, we send them a letter. Okay, this is the instructions. You provide us these detail, and we will provide you the detail like how your work will be used. Okay, how your work will be used and how important is your work. Like, this is a material subsidiary, this is a material joint venture for us. Okay, this area, let's say for example, in whole of the group, sometimes the arrangement of the companies is such a way that one is the manufacturing and the rest are sales entity. One is the company where all the patent, trademark, manufacturing, assets, everything is lying. So we need to tell them, okay, you are material for us. Your work is material for us. Kind of that. How your work will be used. Okay. I will inform him special areas where I have a special focus, kind of, areas requiring special consideration. I will ask them to, please perform procedures to identify intercomponent transaction. I'm not sure how many of you have seen that scenario, but there is, very specific scenarios are there in some countries where, okay, we consider this particular component, there's a joint venture. Now this joint venture, or let's say for example, there is one entity which I consider as a subsidiary, but that particular country has such a kind of norms or such a kind of definitions that some parties which are not related to the group company becomes related to that particular component. So they have an intercomponent or related party transaction which might not be a related party transaction for me, just because the country is having such a laws or regulations. They have to classify that particular transaction as a related party transaction. So there are lot many complications you can't even imagine when it comes to the intercomponent, related party transactions, or reporting of the financials when the component is not situated in India. So in that case, having all those details, providing those details well in advance is very crucial. Then asking them or providing them the details regarding the significant accounting policies, auditing and reporting requirements, specific auditing and reporting requirements. Tomorrow, let's say for a holding company, there is some specific reporting requirement by RBI or SEBI, which might not be there with respect to that company. Okay, so they might not include in their financial statement. I will tell them, okay, I need this specific reporting requirement because as per the RBI norms or regulations, I am required to report over here. I am required to report in my details, in my numbers. So you provide me these numbers separately, plus some kind of representations from management. That I may need as part of my reporting requirements. And I usually give them a summary, checklist kind of thing or questionnaire kind of things where they have to fill all the details. On the basis of that, I may think, okay, these are the things that I need to tell them additionally. Moreover, what I do is, let's say for example, after doing all that stuff, still I think I don't have a sufficient and appropriate audit evidence. If after above procedures, still principal auditor feels that sufficient and appropriate audit evidence is not there or is not present, then what? What you will do?
Disclaimer of opinion.
Anyone else?
So if it is pervasive, then it will be a disclaimer of opinion.
There is one more thing I can do. Before modifying my opinion, there is one more thing that I can do.
Sir, we can issue qualified opinion.
No, before I'm saying before qualifying my opinion,
Key
before
audit matter
modifying my opinion.
701. SA 701 key audit matter.
No,
Management representation.
no. So simple, it's pretty simple, straightforward. Visit the component and perform testing. So as a principal auditor, I will go the component and I will perform the testing. If that is also not possible, then I don't option other than to qualify. But I will evaluate whether it is feasible to visit the component and perform the testing, because the amount involved or the area involved is material. That's why sometimes it happens that okay, we visit the component, we perform the testing as per our standards, and then based on the testing we issue the opinion. If not, if still sufficient and appropriate audit evidence is not present, then you may choose to modify the opinion as per SA 705.
And sir, key audit matter तो आ ही नहीं सकता ना 70 के अकॉर्डिंग.
Sorry?
सर ऐसे 70 के अकॉर्डिंग की ऑडिट मैटर में तो जा ही नहीं सकता ना ये मैटर.
No. Reason because in key audit matters, I do not include anything where I have a qualification. So if I am satisfied, if I think that was a high risk area, it was a significant area, but because of my testing, there is no observation. I just want to highlight that this was a key risk area where my time got invested or which is critical from the company's point of view, but there is no risk involved, but there is no observation involved. That will be key audit matter.
Yes, got it, sir.
For the areas where I don't have a sufficient and appropriate audit evidence, either they will become part of my qualification, or in one single case that will become part of my going concern. If I don't feel going concern related, going concern is not there, so I have to include a separate going concern para. Otherwise, everything goes to the modification. Clear? Any doubt? Any doubt till now? The next part that I want to take up, I will take up 10-15 minutes more. Okay. So the next part that I want to discuss is about the observations and finding in the other auditors report. Observations and findings in other auditors report. Now what I will be doing over here is, let's say I have received other auditors report where there are, which is the qualified opinion, adverse opinion. In that case, how will you perform, how will you treat that report? If you received an adverse opinion from other auditor, how will you deal with that report?
Whether that reason for qualification is also relevant for the purpose of opinion that I am going to express, if it is also significant, on that basis I can decide whether I should give qualified opinion also, or other things that I have to do. And if I am giving that qualification on the basis of that other auditor's report, then I have to make a reference to that thing that I am also qualified for his qualification.
Okay. Anyone else?
I would also check his qualification, to what extent he is going to affect my opinion, my procedure, my assessment of risk and procedures that I've performed.
Yes, absolutely correct. So whenever I receive a observation or qualified report, modified report from the other auditor, few things that I need to look into. Number one, what is the observation? Okay. Now it may be a observation, it may be a qualification from the standalone report point of view. Let's say, for example, the entity is 10 CR revenue entity. There was a 1 CR, or let's say 1 CR related issue, 1 CR wrong revenue recognition, okay, of 1 CR. They issued adverse report because it's 10% of the total revenue which is wrongly recognized. Perfectly fine. My entity as a group, as a consolidated financial statement, it is of more than 50,000 crores. For me, 1 CR might not even be material. Or if it is beyond that, then think about it's not even material. An adverse report at the component level can be irrelevant or not material at the consolidated level. So first of all, understand the observation, the amount involved, and its assessment as per consolidated materiality. Okay, once I will assess the impact as per the materiality, if I find that is material, then it's a separate story. Then I need to think, if it is not a material for me, I may choose not to qualify. Okay, I may choose not to modify my opinion. But if it is material from the group's point of view, then I may ask other auditor to perform supplementary testing or supplemental testing. What is supplemental test? Additional testing. What I need from the comfort's point of view. And based on that testing and based on the testing's outcome, I may not qualify my report, and that is totally dependent upon the outcome. So based on the outcome, I may issue modified opinion. So this is how it works. That based on the that particular type of modification, based on that particular type of impact on my overall financial statement, I may include that modification into the my audit report. Any doubt? If you want to see, I can show you one example for that. Again, this audit report is taken from the public domain, don't go on the name. So it is on the page number 15. If you see over here, this is the audit report of the consolidated financial statements. Okay. This is basis for the qualified opinion. And this is because of some different entity that has incurred losses and all those things which are going on with that different entity, there is a qualification. So this qualification doesn't pertain to the original entity, but this pertains to some of the component. And based on that, because it is material, that is included in the basis for qualified opinion. So if the qualification adverse opinion in that report is material after performing the supplementary testing. If I still think that has an impact on my financial statement as a consolidated financial statement, yes, I will issue a qualified opinion and I will refer to that particular observation over here. Any doubt till now? Any doubt? Okay. And the last part that I want to discuss is whenever we are relying upon the work of another auditor or other auditor, we have to include that, on the basis of which we are relying. For example, principal auditor has to specify in the report in other matter paragraph that, his opinion is based on the financial information of the entity which have been audited by other auditors, like this paragraph. So this is necessary. I need to specify in my audit report that these are audited by someone else, not by me. Management has furnished the report of these audit reports to me, and I have relied upon that. So this is something I need to specify in my audit report, that these are not audited by me. This is audited by someone else. And sometimes you get subsidiaries which are not audited even. So you get management financial informations which are not audited by any auditor because there was no requirement for the audit. In that case, you highlight that also. Okay, so this is how, even in this report, if I show you, this is the paragraph where they are specifying that these are something which have been audited by their respective independent auditors, not by us. So this is something that is required to be given as per SA 600. Clear? Any doubt to this? This was your SA 600. We will quickly take up the study mat and we'll go through that. So SA 600 4.5.1 on page 3.18, we discussed about the work that is to be used by the other auditors, okay, the principal auditor, and this does not deal with the joint audit scenario, which is covered by SA 299. Okay, joint auditors. Then you have a definition: principal auditor, other auditor, components definition. Okay. Then we have this important point: before accepting the work as a principal auditor. Then principal auditor's procedures, right to visit, as I told you, right to visit. Principal auditor's professional competency of another auditor. Okay, when using the work of other auditors, then you may think whether you should perform procedures to obtain sufficient and appropriate audit evidence, or the other auditor's work is adequate for the principal auditor's purpose. Is it sufficient type of assurance and all that stuff? You have this chart, very important chart. I would suggest to go through this one. Then principal auditor may wish to visit other auditors based on the nature, timing, extents, materiality part that we discussed, professional competency of other auditor that we discussed, knowledge that may be enhanced from the review of the previous audit work, something like that. So you consider all these information and decide whether it is sufficient for me or not. Significant findings of other auditor. If it is material for me, then I may ask him to perform supplementary procedures. If after supplementary procedures, if I still decide, okay, no, the observation is significant, I may choose to qualify my opinion. Okay. Working papers, documentation, whatever we have discussed, we are required to document that. Coordination, as I told you that, I ask information, I provide the information. coordination should be there, sufficient liaison between the principal auditor and other auditor. Then reporting considerations, if I am qualifying my opinion or disclaiming my opinion, something like that, then what should I do? Okay. Modification in my audit report, how I need to deal. Plus division of responsibility means I am not responsible for the work performed by the other auditor, that I showed you in another matter paragraph also. And plus that I am relying upon the statement and reports of other auditor. This is other matter para as per SA 600 and SA 706. Okay, so that is your SA 600 in study mat. Clear? Any doubt?
Sir,
Yes.
the word you used is limited assurance. Does it mean that qualified opinion we have issued?
Limited assurance and qualified. So the type of assurance?
Yes, sir.
No, let's say for example, limited assurance means he has performed only review of financial information, not an audit. And that review report has been submitted to us. That is a limited assurance report, not the reasonable assurance report.
Okay, sir.
Any other doubts? Any doubts? No? Okay, good. If no further doubts, I propose to keep till here, and in the next session we will continue and we will see other standards in the SA 600 series. Okay? Thank you guys. Thank you for your time. I'll see you in the next session. And happy Diwali to you all.
Happy Diwali, sir.
Happy Diwali.
Happy
Yes.
Diwali, sir.
Happy Diwali.